Facebook's Libra is spurring central banks' interest in issuing cryptocurrency. I'm Kieran from Crypto Bros. Really happy to have you here with me today. It's incredibly hot here in Switzerland, 37 degrees Celsius. Last week has also been incredibly hot, so I hope wherever you are, you've got a little bit of lower temperature and are coping with it. If you've got higher temperatures, then my condolences. So let's get started. And we had actually in the town where I'm living, I live in Basel, Switzerland. And yesterday there was a meeting of central bank heads in the BIS, Bank for International Settlements, which is located in Basel, Switzerland. So it's the Bank for Global Central Bankers. It's the stodgiest of stodgy institutions, in other words. It's also been slow moving when it comes to cryptocurrency. And however, now they've been taking up the pace, especially with the new digital cryptocurrency called Libra. So if we go back a bit, in March, BIS chief Augustin Carsten, he's the head of the central bank, BIS, he stated that he doesn't see any value in making a stable coin for banks, bank digital currency. And now Carsten is doing a turnaround 180 degrees, and they might be actually issuing something. So the BIS on June 30, yesterday, issued its annual report with an entire chapter of four in total devoted to the role of big tech in finance. So we'll look at that afterwards. There are a few interesting points I want to cover. So Carsten also told the Financial Times that the BIS is working with central banks that are developing digital currencies. Many central banks are working on it. We are working on it, supporting them, and it might be that it is sooner than we think that there's a market, and we need to be able to provide central bank digital currencies, especially since in many countries, the thing is, in countries such like Mexico, there are many people that are still unbanked, and that's pretty crazy. So especially with these new currencies such as Libra coming out, this will make that will be introduce a lot of people who normally don't have access to financial services for banks, still the possibility to send money abroad and so on. So that's going to be very interesting to see how this plays out. So let's continue with the BIS report expresses concerns about big tech's entrance into finance in recent years, noting that the amount of data that giants like Facebook, Google, Amazon, and Alibaba amass pose a threat to privacy and disadvantage big banks. So basically, they're taking away the competition for big banks, which explains why big banks are kind of scared of these new financial institutions. So given the company's increased interest in finance, tech firms are involved in everything from offering credit to lending money to issuing currencies. They are a force to contend with. In light of this, the BIS is planning to start an innovation hub for financial technology in Switzerland, Hong Kong, and Singapore in collaboration with their respective monetary policy officials. And they will also set up fintech innovation hubs to explore the territory, Swiss Info reports. So they've not got the early advantage. So that's one thing they have to take into account, especially since they've not been very pro cryptocurrency in the last few years, even until the beginning of this year. So they're going to have to step up their game if they want to bring something out that's going to contend, for example, Libra's stable, the Libra stable coin from Facebook, especially since one aspect of that is very powerful, and that is Facebook has around 2.7 billion customers across its platform, and that includes Instagram, Messenger, WhatsApp. And Facebook has a user base like no other. Unlike most crypto projects, Facebook doesn't have to convince people to sign up. It has them, and Libra will be integrated into apps that are already a part of their daily lives. And even though I'm not a big fan of this new cryptocurrency project by Facebook, especially since they have not been the best in terms of data privacy and so on, if they already got a lot of power, I think it's going to work pretty well for them, especially since the user base that they've already built up is very, very powerful. They don't have to find new users. They're going to just be like maybe add a wallet to WhatsApp, and that will already allow many users to send currency to each other or receive currency, which is very powerful. So that's why the ease of use is probably going to be on a scale of like comparing to setting up a Bitcoin wallet or just the Ledger wallet. That's quite complicated. Not everyone can do that. And I'm sure the way that Facebook is going to implement their Libra wallet is going to be so easy to use that anyone's grandma is going to be able to send cryptocurrency, the Libra coin from to whoever. And I think that's one aspect that's going to make it so powerful and will push the adoption. So yeah, the announcement spurred excitement, of course, in the crypto markets. However, the excitement, I would say, it's split. From one side, people are not really happy that Facebook is going to have so much power as a financial institution, and the other aspect is some people are happy because they believe that this interest in the Libra coin that is happening will push a lot of new investors into the other cryptocurrency markets. Now, it's still not clear if ever central banks will roll out their own cryptocurrency. Carsten isn't totally sold on the viability of digital coins just yet, which I think is very interesting since if you look at the USD, 90% of the US dollar is more or less a digital coin. The Swiss franc is more or less a digital coin because much of the actual physical cash which you can touch it's around 8%. So the rest of it is mostly digital. So digital coins are nothing new. That's already existed a long time. Now, if we go mentioned, I will be talking about this annual report, and that's what we'll look at right now. So this is big tech in finance, opportunities and risk. So the key the keynote takeaways from this is the entry of large technology firms, big techs, into financial services holds a promise of efficiency gains and enhanced financial inclusion. Regulators need to ensure a level playing field between big techs and banks, taking into account big tech's wide customer base, access to information and broad-ranging business models, and big tech's entry presents new and complex trade-offs between financial stability and competition and data protection. Now, I'm not going to go through the whole report. I'll link it down below if you're interested in looking at it, reading it. I think it's very interesting. And you're talking about very, very big firms that are moving into the space or have already moved into the space of either offering financial services to their customers like Alibaba, Amazon, Facebook, now with the Libra coin, Google, Tencent, and so on, and they're growing rapidly and also offering financial services. So for example, let's see the big techs in finance. Activities of big techs in finance are a special case of broader fintech innovation. Fintech refers to technology-enabled innovation in financial services. So now here's a nice graph which shows a good representation of big tech's revenues by sector of activity. So the biggest sector with 46.2% is the information technology, and the second biggest one is consumer goods. And the regional distribution of big tech subsidiaries are Asia Pacific with 42.9%, and that's a massive market. And a sample here of these two pie charts are Alibaba, Alphabet, Amazon. So Alphabet includes Google, Amazon, Apple, Baidu, Facebook, Grab, and many more. And I think it's actually very interesting. So here are the financial activities of selected big firms. And it's very interesting. Here we've got some companies in emerging market economies, Alibaba, Alipay, Tencent, and that's a big thing. Tencent is a very big company in China, Alipay as well, which is actually sub-company from Alibaba. And they offer, many people in China, they can buy stuff in stores just using Alipay, paying with their phone. Mobile payments is a big thing. Now you've got also Baidu, which is similar to, if I'm not mistaken, that's the Google that we know. They use Baidu to search, and Baidu also offers payments. And then you also got M-Pesa, which is very popular. It's not actually a cryptocurrency, but it's something similar, and you can send M-Pesa by using by sending SMS from one phone to another, and it's very popular in East Africa, Egypt, and India, because the thing is, many people don't have banking services, they don't have bank accounts. However, they do have a mobile phone, and with this mobile phone, they can send payments easily. So M-Pesa is also very popular. Now, of course, there's also some advanced economies such as Google, Amazon, and they're all moving more and more into this service and starting to replace the traditional banking world. And I think that's why most big banks are starting to get scared, as they're realizing their cut of the pie is decreasing more and more. Now, another thing I wanted to show you, which is below, if it's not actually this here, it's a very nice graph, and this is the rise of big tech money market funds and their sensitivity to returns. So money market funds in China, money market funds is abbreviated by MMF, and that's, as you can see, this is rising considerably. And yeah, this is actually, it's very good. So it just shows that the economy is favoring these big tech money market funds, and so on. Let's see. I think there was also some nice. Now let's skip this. As I said before, you can actually look at this article below. The big tech life cycle. So big tech's primary create value as online multi-site platform MSP by enabling and catalyzing direct interactions between two or more groups of users, buyers and sellers. And the three main types of online platforms are social networks, e-commerce platforms, and search engines. So here, this is also very interesting, and that's the big tech's life cycle theory and practice. I won't go into this too much, as you can read it down in the article. However, it's very interesting, especially since we can see here some more or less unicorn companies which have grown massively, extremely, had a very high exponential growth, such as of course, here Kakao, Alibaba, Facebook, Tencent, and so on. At the beginning of 2010, were nearly nowhere to be seen on this big tech landscape. Now, here, this is also very interesting, which is the banks versus big tech's competitive advantages and disadvantages, where you can see actually what the risks that the banks see in these big tech companies. So, for example, large banks, talking about data, verified, so the plus, verified reliable customer data with a long history, soft information from personal interactions with customers, high importance of data privacy to support customer trust. A negative aspect, small number of customers and limited range of non-financial activities to collect data from transactional data, often one-sided, so one counterparty of transactions with another bank, legacy technology limits data processing capability. So the negative aspect is, many people don't also have access to these banking services. Now, talking about data with big tech, negative aspect is a mixture of verifiable and potentially less reliable data, shorter history of customer data, lower priority placed on data privacy and protection. However, I must say, I think we're moving in the right direction with the KYC and AML rules, and hopefully also some more audits. So big techs will also have to apply, have banking or financial licenses, so they will have to adhere to data privacy and protection laws, and hopefully that will increase and reduce this negative point. A plus aspect, data on a very large number of customers, technology and business model built to collect and merge data, network of customer interactions is a key data dimension. Now, of course, one can argue if this is actually a plus or a negative, because basically what this means is that they're going to be able to mine the data to get many key points with artificial intelligence and deep learning on how people are going to spend their cash. And you have to think about if that's something you like or you don't like, because the more we use big tech's apps, mobile services, and so on, they're going to get more and more data which they can use to customize products and services for individual people. And it might be good because then you get individual services customized to your needs. However, you're going to have much lower data privacy. Now, talking about the network, on the banking side, large number of financial activities and services are already provided. Of course, with this, you can also argue that maybe it's time for a financial revolution and new services, that the old services are outdated. Now, a negative aspect here on this is strict regulatory limits on activities and use of data, higher marginal costs of serving additional customers. For the big techs, need to reach a large customer base to exploit network externalities. That's not a problem for Facebook. They've already got a huge customer base. Plus sign will be significant network externalities due to wide range of non-financial activities, captive ecosystem with potential high exit costs. So let's skip the activities aspect. However, I think all in all, it's quite interesting to see the bank's view on big techs and how they see it as a big risk to their industry, and they're starting to wake up and think of ways that they can maybe save themselves from losing too big of a chunk of this financial market. So big tech, credit assessment, big data and artificial intelligence. Let's broach this topic. Big tech's lending decisions are linked to the processing of large quantities of information, big data, using advanced analytical methods such as machine learning and network analysis. Big data relevant for financial services obtained directly from big tech platforms include transaction sales volumes and average selling price, reputation related information, industry specific characteristics. This can also be enriched by using non-traditional data obtained via social media and other channels. Now, the thing is with this, it can be used for good, or we might end up in a situation like Big Brother's watching you, as we've got now in China, where apparently, depending on which films you watch, or if your social credit score is bad, then you might not be able to book flights. And that's quite scary. And that's maybe look into what might happen if we don't start looking into a different data privacy rules and so on. So I think Europe is on a good path with that. I think China is going in a direction I think is pretty scary. So if you've got some points and opinions on that, don't hesitate to leave them down in the comments below. But that was it for this article here. I'll link it down below. I think it's very interesting, but it definitely needs a more thoroughly read to get all the details. Now, I've got a few interesting other articles around the same topic, and that will be central banks. This is central bank plans to create digital currencies receive backing, and this is Augustin Carsten, the head of the BIS. Global central bank may have to issue their own digital currencies sooner than expected. And this is the general manager of the Bank for International Settlements. We were talking about him before, after, of course, Facebook revealed their plans to create its own stablecoin. And Augustin Carsten, who heads the BIS the central bankers bank told the Financial Times that the organization supported the efforts of the world's central banks in creating digital versions of state currency. So many central banks are working on it. We are working on it, supporting them, Mr. Carsten told the Financial Times. Now, central bankers, including Mr. Carsten, have been dismissive of the first wave of cryptocurrencies, viewing the likes of Bitcoin and Ethereum as speculative instruments that cannot be described as money due to the volatility of their value against the most widely used state currencies such as the US dollar and the euro. But he fails to mention that and basically those fiat currencies are backed by intrinsic value and not by gold or anything else. So it's basically people are believing that the state is doing the right thing. People believe that this currency can be used, but actually what's backing it? Not very much. However, Facebook's plans to create Libra, a stablecoin with its value pegged to a basket of yet unspecified currencies, backed by as yet unspecified assets, have attracted attention from officials, including at the Basel-based BIS. Now, talking about what assets are going to be backing Libra, I would like to see more than just fiat values pegged to Libra. What would be nice would have some commodities, maybe gold, silver, or maybe even uranium pegging Libra as only fiat values. Then the Libra coin will also be subject to quite high inflation, as are most fiat currencies. Now the issue is, how will the currency be used of these global financial banks, and will there be a discovery of information or data that can be used in credit provision, or how will data privacy be protected? Mr. Carsten said a very simple way to regulate this is to start with anti-money laundering rules. That is a very immediate and very obvious concern. However, I want to broach a topic here about the fact that the only institutions that are more or less immune against money laundering are banks. So I think it's pretty interesting that that's one of the main topics that they are concerned about